Good afternoon, everyone. Welcome to the marketplace. Coming up in our headlines, government announces $8 billion savings after concluding negotiations with bilateral and Eurobond holders. What does this mean to our economy? We shall be analyzing with an economist. Meanwhile, Eurobond holders give more details on agreement reached with government over the restructuring of more than $13 billion debt. Also in this bulletin, McDan Group set to list salt mining business Restructuring on Ghana Stock Exchange before the end of third quarter of this year.
It is spotting already. We will be hitting the stock market within the next 2-3 months. I believe that it's a big thing, and this is what is going to change the economy.
Plus, government registered the marginal oversubscription of Treasury bill sale to the tune of $3.60 billion of the group.
Need to stretch our tentacles to look beyond our territory. We cannot be giants in our own territory and think we are gorillas. I mean, when you move beyond your territory, that is what the world will see, whether you are a gorilla or you are a dwarf. So we need to move beyond and make the best. Ghana is a good place, and also when you move out of Ghana, people see you differently, and also as compared to other countries. The confidence, the loyalty, the trust is there. So you get received. So I believe that we have to take advantage of some of these availabilities.
Let's just talk about one of your subsidiaries that is doing so well. And in terms of export, when are they going to start Restructuring?
Oh, we have started exporting already. We will be hitting the stock market within the next 2-3 months.
The group listing or the subsidiary? The
subsidiary, Restructuring, the salt. I mean, I believe that it's a big thing, and this is what is going to change the economy. And we are listing in the next 2-3 months for every Ghanaian to have a taste of it, to be part.
Well, meanwhile, Eurobond holders have been given more details on the agreement reached with government over the restructuring of more than $13 billion debts. And my colleague, George Yafe, has been following those updates coming in through that sector and joins me in studio with more on that. Thanks so much, George, and good to see you in the studio, back in Ghana, I should say. Now, tell us the details the Eurobond holders have been given.
So, Pius, everybody was looking forward to see what these Eurobond holders or these commercial creditors would tell us when it comes to the terms of the agreement. So, for instance, if there is a haircut, is it about 30%? What will be the maturity dates and all the rest? But if you go through this independent statement that has been issued by these bondholders, it more gives us some details about the impact of this deal on the broader economy and the IMF program. First, you want to look at the fact that the fund program is looking about the fact that, listen, you should bring your debt to certain levels by the year 2028. And these bondholders agree to, or they've argued that based on this deal, Ghana is on track to hit that target set by the IMF under the fund program. Also, another thing that these creditors are talking about in this statement is that government has agreed that instead of maybe waiting to like a year before, maybe end of year or something, before we get a true picture of our debt situation, every quarter government to be giving more details on how its debt commitment to all these creditors and also our debt position at the end of this quarter. So more transparency when it comes to the government's debt obligations and how that will impact on the economy, and also how that will also impact on Ghana's program with the IMF. And that is what you're seeing that this statement is doing, that has been independently issued by these commercial creditors or all these investors out there that are holding the Eurobond, including the commercial banks as well.
And ultimately, this, of course, would have an impact on our debt situation in the country, take it or leave it, irrespective of the fact that, well, it's been extended by way of payment of our debts, isn't it?
So you're right on that one. Again, we are still trying to do the hard numbers in terms of the real savings. Again, the minister is saying that with respect to the Eurobond holders, about $8 billion, and the bilateral creditors about $2 billion. Now, if that means that there should have been some haircut or maybe a deferred payment, but if you defer payment, it means that an escrow account has to be set up where you will still have some obligations. Depending on who you are engaging, there are some who are saying that it is still the same thing because you're going to meet your debt obligations. You are now not even servicing these debts. Look at what has happened to the Ghana cedi. Some are also saying that the uncertainty fueled by these Eurobond holders was negatively impacting on the Ghana cedi. And now that this deal has been struck, maybe we will see the cedi responding accordingly. Maybe we will see that daily gyrating of the cedi now slowing down and all the rest. So these are some of the details that have been captured in this statement that has been issued by the creditors or the Eurobond holders. Yeah.
All right. So again, talking about escrow accounts and of course how we intend to pay our debts and what have you, do you think government will take that decision by creating an escrow account to, pay the interest on these debts?
Well, the interesting thing was that the Minister of Finance at the recent engagement announced that he has already made proposals to Cabinet on this being done. So if the maturity date has been deferred and all the rest, you don't want to wait for that day to come before you're struggling for foreign currency to pay these things. Set that account now and start making those commitments now. So that when the time is due, you then not be put under pressure to go and draw down on your foreign reserves or draw down on other commitment that you're making to settle this. So from the minister's words, it appears that the measures have already been put in place to ensure that we are not taken up by any surprises. All
right, hold on for me, George. And I'm told Courage Buti has joined us via Zoom for some great analysis on this as well. Thanks so much, Courage. And now we know it's official. Ghana's debt restructuring has ended. $8 billion saved after concluding negotiations with bilateral and, of course, Eurobond holders. How significant is this?
Oh, yes. Good afternoon to you and your listeners. Significant development. It's been coming over the last few, if you like, months and so. Just as a context, I think the total program assumed a balance of payment deficit of about 14.9, almost $15 billion to be funded with the IMF loan, what will come from the World Bank and then from the creditors. Really, I think the total external debt restructuring is supposed to yield a savings of about 10 billion, if I recall right, for balance of payment support. So with this giving us 8 billion, from what we are hearing, I'm not sure what the figures look like for the official creditors. It looks like we are getting close to that gap of 10 billion that needs to be funded. Immediately, what it does is it eases the concerns around Ghana's credit, the negative sentiment that have fueled currency depreciation, that has fueled the, if you like, the downgrades we saw in time past, and then why interest rate at this high, and the lack of offshore appetite on the local markets and all that. This is kind of breathes fresh air into the dynamics, and we can only expect that in the coming days there will be a reflection of some of these things on sentiment, where a bit more currency stability than we are seeing now, and probably some positive development in interest rate front and all of that coming. But that will be over the coming day. I don't think the deal is concluded as being reported. I think we've reached an agreement in principle. So the rest of the processes will now continue, and then we will get to the point where these investors would have to tender their bonds, and it is at that point when bonds are tendered fully that we can say we've reached a conclusion. So I think it's a good progress, but I think there is still some way to go, which now appear to be more a formality than anything else.
I see. So let's talk about the $8 billion, I should say, we have gotten out of this. Now, how beneficial or useful should these monies be, and which areas would you propose to be channeled to?
I don't expect us to do similar things like we saw in 2004, 2005, there where a toilet is built up and we say there's HIPIC benefit. In fact, the savings from these monies, debt restructuring, I think should uh, not be dissipated in projects to get names and all that and say, well, we could have paid maybe 10 million to say UK, now 10 million is going into this. We have a fiscal problem. We have a balance of payment deficit position that is quite difficult to close. And a number of other things on the PFM side that needs tackling and tackling properly. We have problem raising revenues and all that. And we have also debt service beginning to resume because the moment we completed external debt, commercial debt restructuring, unlike the official one, the moment we complete external debt restructuring, I'm not hearing of moratorium. So 6 months on, we would have to start paying interest and all that. And of course, sustaining the macro outlook also, and then the investor sentiment in the local economy. So my suggestion would not be that these are not monies we even had sitting anyway. They were monies we should have paid that we suspended because we didn't have to start with. So it's not like it's even sitting in some account. You say that instead of paying interest, let's use it. And let's not go creating expenditures in the name of having 8 billion in savings. Think prudence from now on is what we need to do. Commitment control, avoiding arrears creation. We are in an election year. We need to avoid at all costs all the extra budgetary expenditures that could drive the fiscals out of gear again. And then even beyond program, how we can entrench the gains we are making and the reforms that are coming with this program. I think those are the critical things at this point, rather than creating assets or, if you like, infrastructure project and all of that and title them savings from debt restructuring. I don't think that will serve our interest at this point. More so, we don't even have the money sitting in an account somewhere. We need to focus on sustaining debt sustainability going forward, being current on our payment. When we do that sustainably, we would have rebuilt the buffers required for interest rate to begin to decline.
Well, in as much as we've been able to restructure our debts with the Eurobond holders, etc., now the major hurdle now is how we will be able to service those debts when the maturing dates basically are due. Do you think that we would be able to do that looking at past precedents?
We should be able to. From what we're reading, there's snippets of info around it, and I must say I haven't read the official the creditor committee statement. I haven't read it yet, but I already hear some interest rate reductions from some of our bonds. We know largely those bonds are 7, 8, 9%. Some went as even past 10% and all of that. We're hearing now between 5 and 6%, and even in some instances 1.5% interest. Those are the areas you see reduction, right? And the official creditors are giving you a moratorium maybe in the next 2, 3 or so years. So it means that you again have some breathing space and cash flow, if you like, support that is coming in the interim. What that does is it gives you the room to build buffers to be able to pay interest when eventually it resumes. And for the Eurobond holders, I believe 6 months after the deal is signed, we have to start paying coupon. So everything we should have been paying in times past, which we haven't paid within this period, and that is almost 2 years already. Everything we may have accumulated within that period that should have gone into interest payment that we haven't, it's supposed to be channeled into maybe some escrow. We have a sense of what the periodic interest payment looks like. We need to have a plan of flowing money into that escrow account that can be paying those interests when they fall due. And I think we should be, in fact, we don't have option. We should be able to do that in this instance, because this is even lesser interest obligation compared to what could have been under the old terms of the bonds we are exchanging now.
All right. So just Pius, by the way. So Courage, we know businesses and, of course, market watchers are very much interested in knowing the impact this would have on the currency. Yes, and of course, you've mentioned it about the foreign exchange rate. But within the medium to long term, what are we supposed to look forward to following this development?
It means the wild run of 2022 and 2023 hopefully is over. We do not expect to see a lot of that again going forward. And largely, that wild run was driven by the multiple downgrades. It was driven by the widespread portfolio repatriations. And of course, the generally bearish sentiment. That means that even FDI inflows were affected and all that. With this out of the way, if concluded decisively, we should begin to see offshore interests come to Africa and by extension Ghana again. That will be a risk-on mode. And we expect, as they go along, that the Fed could pivot, most other central banks could pivot, and will set on that tone of risk-taking in emerging markets again. So we may just be positioning ourselves in time to take advantage of some of those inflows, which means that we could begin to have the improvement in FS liquidity beyond just what the IMF program gives us, but from market sources. And that will help the banks to also be able to meet the needs of local guys who demand FS for their normal transactions. And I guess that is the beginning of the improvement we should see in the system, where liquidity levels will improve, but sentiment to be less bearish. Yes, in fact, the last 2-3 years would have helped a bit, and those will be the beginning of CD stability re-emerging.
Research lead GCB
It's not giving. We have to work for it. Yeah, it's not giving. We have to work for it.
All right. Research lead GCB Capital, Courage Buti, we are indeed grateful for speaking to us on the marketplace. And George is still here with me in the studio. So, George, finally, what is next for government now that negotiations are done?
So, what the statement said on that is an agreement in principle. An agreement in principle is not a final agreement that has been signed with these commercial bondholders. It means that there will be some small rework that needs to be done, and after that, that final deal will be struck. As Courage earlier explained, if that final deal is struck or the agreement is signed, then we will know the clear dates where government will resume the payments and all those things. But earlier on, over the weekend, the Minister of Finance said that they've kind of reached an agreement with them. So it means that we should see government now sign an agreement with these bondholders, and then the date will be set that going forward, maybe from January 1, 2025, government will commence paying the interest on these Eurobonds and all the rest.
Thank you so much, George. You are faithful for joining me in studio with the breakdown on that developing story. Let's shift focus. But within the mining market, though, government registered a marginal oversubscription of Treasury bill sale to the tune of 3.60 billion cedis. But there were mixed developments with respect to the yield curve. Now, that's according to an auction result by the Bank of Ghana. Here's more in this report.
On the money market for some time now, despite the government recording a 1.38% of the T-bills auction. Per the result of the auction, investors showed more interest in the 91-day bill than the other financial instrument. About 2.761 billion Ghana cedis, representing 76.61%, came from the three-month instrument. The uptake was the same as the bid standard. For the 182-day bill, 660.62 million Ghana cedis of the bids were tendered and all were accepted. About 182.4 million Ghana cedis were also tendered for the 364-day bill. Again, all the bids were accepted. For the interest rate, the yield on the 91-day bill went up slightly to 24.86% from 24.85% the previous week. That of the 182-day bill dipped by 2 basis points to 26.80%. Similarly, the yield on the 364-day bill also went down to 27.78% from the 27.81% the preceding week.
You're still watching The Marketplace. Now, the Executive Director of the Center for Extractives and Development Africa, Samuel Bequin, has called on government to address concerns of political interference and inadequate funding to ensure the full impact of development authorities. This revelation was made during a media launch of a report by the Center for Extractives and Development Africa titled Impact Assessment of ABFA Utilization by Development Authorities. There is more in this report.
Interference, inadequate funding, and lack of district and municipal authority involvement are major challenges hampering the mandate of development authorities in Ghana. This was reviewed in a report by the Center for Extractives and Development Africa, CEDA, titled Impact Assessment of ABFA Utilization by Development Authorities. According to the report, infrastructure and agricultural projects had the most significant impact. Funded by the annual budget funding amount, ABFA, the three development authorities, the Coastal, Middle Belt, and Northern Development Authorities, were established in 2017 to promote socio-economic growth in their respective zones. Samuel Bekwing is the executive director of CEDA.
When we did the study, we wanted to look at how the projects that oil revenues have been funded by the authorities have led to reduction in inequality, reduction in poverty, and also had impact on gender, women, children, persons with disability, and vulnerable groups. And our research has shown we selected 10 projects from each development authority. The projects were expected to be completed. The project included projects located in rural areas and urban areas, projects from the agri sector, health sector, education, and roads and highway. We noticed that if you look at the approach by the development authorities in terms of they conducted needs assessment, however, there was some political interference in the needs assessment.
He highlighted some of the challenges facing the three authorities.
There is a problem with consultation between the development authorities and the district assemblies, and we noticed a turf war between them. The development authorities and the district assemblies do not really get along at all, and we believe that should be improved. We've also noticed that there are some projects that they have been selected and it has been delivered. However, ancillary facilities that are expected to ensure the project are operationalized and generate the optimum returns are not. Example was in the Middle Belt, where they built a very nice surgical center, but there was no surgical tools to operationalize the surgical center.
The report underscores the importance of ABFA-funded projects to Ghana's socio-economic growth and recommends improved funding and collaboration with relevant agencies to maximize returns.
We believe that if government could come down to ensure that these issues we've identified in the report are addressed, we believe that it will help to ensure maximum returns or optimum returns from our petroleum revenue. We had recommended, if where particularly like the market stores that have been built, where they have not been completed or when they are going to build, they should probably provide opportunities for public-private partnership between the development authorities and private sector, those who could build market. Development authorities could invest in that as well as a minority shareholder, and then continue to monitor this market, and once the market is built, maybe a BOT procedure whereby it will revert back to the development authority.
And that's it for the marketplace for today. I am Pius Kojo-Baka. For more stories, feel free to log on to myjoyonline.com/business. More stories on that portal. Bondholder community reaches agreement in principle with Ghana on debt restructuring. We've got more stories when you log on to myjoyonline.com/business. I am Pius Kojo-Baka.